Okay, second video of the day. It's January 2nd, 2020. Let's do a trade review. Today is a good day for it. First one, BDSI, which I bought on earnings day. Big mistake and stopped out that day. Now, if I had instead put my stop somewhere down here, which definitely was a level, we had resistance, turned to support, came nowhere near it. Here I would have still been in the trade. I would have gone up, hit target one, then likely would have stopped out somewhere at break even, or maybe down here. I'll have to not do anything goofy like that again. The big mistake was buying on earnings day. FLXN, I think I bought that. Well, I bought it twice. Okay, the first time sold half at first resistance, then I added. I believe I intended to take off half here and made a mistake and took all of it off. I'll have to look back at the video. Anyway, I chickened out and there was no reason to be out at that point. What should have happened? That's an obvious target one. I should have hit target, raised my stop to $17, and I would still be in the trade. There's no reason not to be. We got this big gap and crap here. Still looks strong. The trend is up, obviously. So I should still be in this trade. Had I been in, I should be up major, even with this pullback over the last 4 trading days. Okay, Brown Foreman. There's one I bought, stopped out, bought the next day, and it crapped out. That's one that just didn't work out, I think. I shouldn't have been out at this point. My stop should have still been under here. Probably a first target there. It's just the way I handled this. I chickened out here. I sold when I should have been buying. We did a big bullish engulfing candle the next day. Surprisingly, though, it crapped out. I don't know if that was 12.4. It must have been earnings. Since March 4th is the next earnings. So once again, that's earnings. Stay clear of earnings, Dan. PEBCAK Paper Trader. Seagate was one that I should still be in. I bought this consolidation. Stop should have been down there. And really, it hadn't gone anywhere. 2.6. Yeah, it's still, the worst I should have been down was less than 4%. That does look like it wants to go higher. A re-entry might be in the cards. Brown Foreman, we've already done. Microsoft, I should definitely still be in that. That was one that I bought the first day. I think I bought that originally with a stop down here. The stop should have stayed down there for quite some time. There's really no pivot here to use. Even then, that would be it. I shouldn't have stopped out there. There was no reason to. There was nothing on the left. There wasn't really a pivot there. That would be the next place for a stop, was a slow pivot. So I should still be in this. My stops were too tight. the trend is up after a long consolidation, I should still be in that. XLK, I should still be in this as well. That was one that was bought November 1st, so shortly after the PEBCAK began, and I don't know what my target was on this. I'll have to look back. I'll have to start marking the targets. But definitely, there was no point in trying to hold on to 2% gain when there was so much potential earnings. I could be up 10% on this now. Nvidia, same deal. My stop was too tight. Stop should have been, I bought on this day. Here, what day was that? November 18th was the breakout day. Pulled back to the test support. Probably a level right there, below that. Should have been the stop. Here, let's see what that would be percentage wise. Yeah, 6%. I should have been down below this pivot here. And if that meant buying half a position and having the wider stop, that would have been the right thing to do. JB Hunt, that's just one that didn't work out. Yeah, that was just an ugly pattern. This is one that likes to boom and bust and boom and bust. It did, in hindsight, kind of a head and shoulders. Retest and failure here. Just an ugly pattern that maybe I should have left alone. Rite Aid. Now look at that. It was just an early entry. It consolidated. Really, yeah, my stop saved me there. When it failed here, that was probably the first sign that this wasn't going to work. So, however, if I had, that really wasn't an entry there. That was ugly. It just happened to pop up, and I don't feel bad about that at all. Sealed air. So that was a short, and that was well played. I bought the breakdown. We had 3 black crows, and once it came up through the close of the prior day bar, I was out. This was extended from the 20. It's a short, and shorts are just quick little ones for me at this point in time. It's a bull market. FLXN. So I bought on this buy setup. And so I sold half here at first resistance. Oh, I've already done this one. Well, let's look at it again. So I don't know why I sold there. There was no good reason for that. I believe I intended to take half off and took the whole position off. I'll have to look back. Nike, I definitely should still be in this. I bought over the failure of this topping tail. Oops. 4% below this consolidation level, I should definitely still be in this. If I took half off here, I would still be in half up to there. SEDG, that would have been a short that didn't work out. It wasn't a good short either. It wasn't a sell setup. It's just an ugly congestion instead of a consolidation breakdown. NVIDIA, I should still be in this as well. I bought the breakout candle. Definitely my stop should have been down here, because there's no reason it couldn't have come back and tested this pivot low here, which it did. It took it out by a little bit, as it always seems to do. We had this pivot low here. So it's definitely a level where resistance turned to support, and I should still be in at least part of that. Back to Microsoft. Bed Bath & Beyond was a buy. Yeah, it was just bad timing. I stopped out below this pivot. Yeah, a re-entry may have been possible there, but it was an ugly pattern. There is all kinds of resistance over here. So let's go down a weekly chart. Yeah, pulled back to test the 200. Did a bull 180. I was just early. Kind of a sloppy pattern. TMCX. Okay, this is that one. I didn't know what it was doing. I bought in this consolidation. I really should have. There was no reason to sell the second half. I sold the first half up here and then trailed it. Should have just let the second half play out to see what it did, and it would have gone up to $11. Looks like this was an acquisition of some kind, but it would have been up 5% on it in just a few days. So the first half I grabbed, didn't know what was going on. It just suddenly spiked and I took some profit. Why not? Second half I should not have stopped out. Foot Locker was a bad entry. That's just a sloppy congestion. That wasn't really a buy setup. I guess it was technically, but it certainly wasn't a good one. I was looking for it to fill this gap. It never did. I got the long solid green bar. So really, okay, first I didn't even wait for first target to get hit. I chickened out. And then second half, really I chickened out on that too. It wasn't a good pattern. It wasn't a good setup. I shouldn't have been in this. Okay, TMCX we've looked at. Activision, ugly congestion, still in the consolidation area. That's butt ugly. I don't know what I was thinking. But I should have had a stop below here definitely if I was going to play this. Should have waited for resistance or a buy setup. This was, here, let's have a look. Okay, so our resistance high was 57.52, 57, yeah, so I bought early. I anticipated, and it failed. However, what would that stop have been? 12, yeah, that's a long way down. That was a stupid trade to get into. Foot Locker, I believe we covered. Yep, that's all we have so far. I'll have to be a little more active and I'll get into some more trades later.